Two must-know tax charts to retire earlier, wealthier, and happier. If you have money in a 401k, IRA, TSP, Roth IRA, brokerage account, or similar, then this video is going to show you how to protect, save, and keep more of it.
Yeah, and over 10 years of doing this on here, there are just two main tax charts that you need to understand that help determine your greater wealth and your greater financial freedom to how much money you actually get to keep more of it than from taxes with your investments and with your assets. We're going to educate you by showing you visual charts, doing visual walkthroughs on here, giving you some guidance on how these work, but most importantly, how you can apply it to your own investments, your own assets, your own financial freedom, and your own planning for a greater retirement as well. Because so many advisors, so many agents, so many people out there don't fully explain these, don't fully understand these, and they don't fully apply these to someone's own planning process for that could save you thousands of dollars in taxes. They can give you back years of life as well.
Wow. So today, financial planner, tax strategist David, and I, Ashley, educator and wellness coach, are going to walk you through these two charts so you can understand exactly how truly tax affects your wealth and your investing. This knowledge can help you retire earlier, retire wealthier, and retire happier.
Yeah, so since 2015, I've been in the wealth and investing landscape here myself, all about tax awareness and tax education, because I've seen and noticed that that is a key play that's so often, they say these words out there about taxes and everyone hears taxes, but hardly few actually apply it to their own money and their own plan, which helps them retire earlier, wealthier, and happier. So things like the IRA, your 401k or TSP, maybe a pension you might have, maybe that Roth IRA, maybe that non-retirement or that brokerage account you have, and so much more are going to be shown in these two different tax charts that apply to these tax systems so that you too can be financially empowered, have that clarity, have that control, and have that greater freedom.
So David, what exactly are these two tax charts and why do they matter so much?
Yep, so the two main tax charts that we're going to be going over here with you are the 2026 federal income tax brackets. This is a very common one. Most people are seeing and they are aware of. This is how, for example, your W-2 income gets taxed. This is how money on an IRA or 401k or a pension are taxed in the future when the money's taken out as it's qualified. Then the other chart that not many people are aware of is the long-term capital gains tax chart and tax rates. That applies to that non-retirement or that non-qualified brokerage account. And we'll be going over long-term capital gains and the chart here as well with the visuals so you best understand these two charts. Now, keep in mind, these are just federal. Every state does have different tax rates that can be applied. So be aware of your own state taxes in addition to the federal. With this video, we'll be going over the federal impacts as that's the majority of planning on here. Now, this does help you out with that retirement timeline. It helps you out with that cash flow analysis for the net on there. Helps you out with tax protections, potential savings on there. Tax diversification it helps out with on there. Help out with Social Security, with your Medicare, with retirement earlier possibly on there, your legacy planning, and so much more. Because remember, that money in the IRA, that 401k, or that pension, you don't get to keep that all. There will be taxes that do apply. However, that money with that Roth IRA, if planned out correctly, you can keep more of that money, or even that non-retirement or that brokerage account using a long-term capital gains, you can keep a lot more money as well, understanding these two charts we're going to be showing you and going over with you as well.
And majority of people, they're aware, right, of taxes and that they have to pay somehow because you can't get out of that. But however, people are not fully aware of how exactly tax planning with investments and assets can make an impact on their wealth and financial freedom. So the numbers on these charts will show you how you can keep more of your money.
Yeah, because the real thing we want to focus on is that net return or the after-tax return money you get to keep and you actually get to spend, not the gross money or before-tax money, because that's not all yours to spend or all yours to keep. So you want to know that net number on there. So let's see the first chart on the screen coming up here as you can see it with me. This is the 2026 federal ordinary income tax brackets that most again have seen. Now this again will go for that W-2 type job income, the IRA, your 401k or TSP withdrawals as example in the future when qualified, that pension, maybe a Social Security benefits tax, short-term capital gains and more. And a large portion of that retirement withdrawals you have will be applicable here. So when you see that IRA balance, keep in mind there are taxes on there, but let's go over this chart. Now, you'll notice on here that there are 3 different categories or charts. There's the single, married filing jointly, and head of household. For the purpose of this video, we'll just focus on married filing jointly. You'll see on the far left-hand side, different tax brackets, 10%, 22%, 32%, 37%. But keep in mind, all your money is not taxed just at one. It's like a funnel system. So using, for example, that married filing jointly, let's say they made $250,000. Now, the $250,000 would fall into that 24% bracket, but not all that money is taxed at 24%. You can see as an example, $211,000 to $403,000, that amount of money is taxed at 24%. Otherwise, it's like a funnel, it drips down where the money from $100,000 to $211,000 is taxed at 22%. Then the first $24,000 to $100,000 is taxed at 12%, and then the first $24,000 is taxed at 10%. So it's a funnel system on there with this. Now also keep in mind there is a standard deduction that helps lower the taxes, and the standard deduction does apply to this chart and even in retirement. But again, we have a separate video going over the standard deduction. This video will not go in depth on that, but be aware the standard deduction is something you could utilize in your favor towards retirement and towards those retirement accounts as well to help you have that greater net cash flow and greater spending you can have on there.
So I think a lot of people, they look at their investing and their retirement account balances and they forget that not all of that is theirs. People do not factor in the taxes and the tax impacts, which does truly matter.
Absolutely. People see that chart and say, hey, when I'm working, that's my chart. And they often forget when they retire and they're taking money out of those retirement accounts and they're qualified withdrawals, that same tax chart does apply as well.
So what about Roth IRAs? And everyone's always hear about the tax-free, no taxes. Can you help explain this a little bit better?
Yeah, great thing. Roth IRAs are talked about all the time. Always this tax-free nature on their tax protection, which they are great, but it's important to understand how that works because the Roth IRAs kind of have 2 different taxes on there that are applied. There's contributions, which is the money you can contribute to a Roth IRA. There's conversion, so converting an IRA to a Roth IRA on the conversion side. Now, that money you put into the Roth IRA, it's taxed at the time you put it in based on your current tax rates. So if you put in, say, $5,000 on there, or you converted $20,000 on there, that money's taxed as taxable income using that chart we saw already on there to determine how much tax you pay on that money going in. Now, if that money is kept in that account though, and let's say it's qualified in the future when you take it out, that money is now tax-free. So you want to be aware of that, the age rule of 59 and a half. Be aware of what's called the 5-year rule as well on Roth IRAs. But if met correctly, you can have that money taken out tax-free. It's not applied to those charts for greater tax on there. Now, there is some criteria on there that if you have, say, a non-deductible only money or a pro rata money on there and you're doing those conversions to that Roth IRA, potentially the taxes can be lower. But for this video, we're going to focus on the overall concept on here to help you out with the Roth accounts on there as well. That way you can keep more of that money, take more of those accounts on there and have a different tax diversification.
Wow. So I really love the idea of having some tax-free money for various tax reasons. Having that sense of control, clarity, and peace is something most people never experience with their money, truly.
Absolutely. And you don't want to have all that money in a Roth IRA account because there are benefits to the different taxable accounts that are out there as well. But let's take the second most important chart now on here for most people, the long-term capital gains tax rates, which will apply to that non-retirement, that non-qualified brokerage type account that people talk of. Now, long-term capital gains, so you understand, is if you've held that stock or that ETF in that account for more than 12 full months or more than 1 full year on there, when you go to sell that security, if there is a potential gain, then that gain, if it meets the long-term capital gains criteria, gets to have a more favorable tax rate and a lower tax as well that you can keep more of that money and that planning for you. Now, let's look at the chart here as it comes up on here. As we can see the long-term capital gains chart, there are 3 main brackets on that far left side. There is the 0%, 15%, and 20%. And they do have the 3 columns, the unmarried individuals, married filing jointly, head of households. Just for this example, married filing jointly on here, we can see that you can go up to about $98,000 at a 0% tax.
Wow.
So if your long-term capital gains are qualified and you have no other taxable income sources, you can have up to $98,000 tax-free from that long-term capital
Wow.
gains. Or maybe you stack it with Roth IRA qualified money that's tax-free, and you have another $98,000 here. I mean, you can go beyond the $98,000.
So you can stack it all. That's
You could stack that money here as well for planning purposes, which is why having that long-term capital gains is important. Plus, with this account type, it doesn't have that 59.5-year age limit on there. So if you're going to retire earlier, it's just a great account to have because it doesn't have those limitations, it doesn't have those restrictions, and you could still get a 0% tax or even a 15% tax, because at 15% tax, it goes from $98,000 to $613,000 is a massive gap. So again, $98,000 to $613,000
yeah.
is in that 15% for that married filing jointly on there, but that's part of that tax diversification strategy we want to have to help you out overall with the greater net.
So just seeing this, you can truly see the benefits of, the tax allocations and how to invest and all of that.
Yeah, now I mean, what would help you is visually or explaining it more.
Yeah.
So let's look at some visuals on here where you can see there's gonna be three main visuals we can do, because like Ashley and so many people, they love the visuals. It's very easy on a pen and paper, or you can pick and put it on there. Let's break it into three main categories, right? We have our tax deferred, the IRA, 401k, that pension money. Then we have our tax-free, that Roth IRA. Then that third one is that taxable brokerage account, the non-retirement, non-qualified account, which we can use either short-term capital gains, which we really don't want to have, or we can use that long-term capital gains tax chart, which is what we really want to have on there. And those are the three main charts overall that we can utilize.
So this is actually a really powerful and simple visual that will allow you to see where your money is, where you're placing it, and if you should change things up for yourself. I've seen that when people truly understand how their money actually works with taxes, they do feel calmer, more grounded, and more confident about their future, which is huge.
Yeah, because remember, wealth and money, it's not the only thing to financial freedom and to retirement. It's emotional. It affects your consciousness. It affects the nervous system as well. So we want to look at the energy, the clarity, the peace, the education, and the empowerment. That way the tax planning doesn't so burdensome to you. That way you can keep more of that money on there.
And if you're younger, if you're in your 30s or 40s, then applying these tax concepts will have even a greater impact on helping you retire earlier. Even if you are in your 50s or your 60s, you can still utilize this information for a happier and wealthier retirement too. People also need to think of the legacy of their accounts when they do pass away and the tax or tax-free assets that they leave to their heirs as well.
Yeah, so again, these two main tax charts on here, the federal income tax and the long-term capital gains tax, are important for everyone to understand if they're of any age, but even more so if you want to have that financial framework, that investment framework, that tax education and that tax understanding. That way you can make better choices, be more informed, make better decisions. That way you can have a greater net cash flow and greater net in your life and take away the uncertainty and know what are my taxes going to be potentially. Now, of course, laws and legislation can change, rates can go up, but overall the core foundation of fundamentals of the tax planning will stay the same on here.
Yeah, we hope that this video has brought you clarity, wisdom, and confidence to your journey so that you can retire earlier, wealthier, and happier as well.